This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Welcome back to Invest Like a Pro. And so today we're going to talk about the S&P. And it's interesting. We finally have something positive to talk about a little bit for the first time in several weeks. So let's go ahead and get into the chart. I've got my 4 time frames up here, and so I'm doing this as of Thursday's close for Friday morning, just so you guys know. Okay, what have we been talking about for the last several weeks? Really been the last couple weeks since we came down this first time down here. I've been kind of saying don't get too bearish. Looking for some type of a retracement back towards the 18-week. I think we have the makings of something like that developing right now. One of the things that I want to make sure you recognize is when you break a rising moving average, and especially the 18. Now, this isn't true of the longer term moving averages necessarily, but anything from like a 20 moving average to less, most of the time, when you break it and it's rising, you'll come back and check back to it. And I think that's what's going on here, because if you see, when we broke this, it was rising. So I think what we want to do is check back to this line and see, does it roll over when we rally back up to it? Now, this is a bias that is pretty negative, in my opinion, because it's on the monthly chart. It's telling us that the odds of just going straight up are very, very small, I think. It doesn't mean we're going down. But if it tries to make an attempt to the upside, you usually have some kind of a W pattern that forms off of this when you get stretched away. So you're stretched away from the zero line and you roll over. So this is just good information to know whenever you're looking at an individual stock in any time frame. If it does that, and a lot of times it'll come back to the 40 and then bounce up, and this line will roll over, and this will actually pinch underneath, and that's a big negative. So that's something we probably want to be on the lookout for. But we've already rallied a pretty decent amount. So, this line could end up continuing to rise if it keeps strong like this. The other thing I would tell you is that we still have a little bit more time, I think, through Tuesday for the end of the month. So we don't really know what this bar is going to look like when it's over. With end of the bar, if it finishes like a big tail, and even turns green potentially, right, with a big tail underneath, then you have to sort of assume we've got some underlying support in place, at least for now. So these are the kinds of things I'm thinking about when I'm looking at what's taking place. Not forecasting, but doing really good analysis. That is a much better approach than trying to make a big market call. Okay, let's look at what's going on the weekly, because I do think this is the key time frame, mainly because we broke the trend. We were up all year last year. We broke the trend line. Now we've come back to test. Now we've gone to a new low. We have our 1, 2, 3 top in place. We now have a downward sloping trend line. And as I showed you a few weeks ago, you can copy this, clone it, and then just move it down if you want to do it that way. And we're down in this area where I would consider it to be oversold. It's a downtrend that's oversold. Now, what I don't like about what's going on is new lows in momentum based on both the seller's strength on the ADX and the MACD to the downside. Here's the positive. Look at this. Look at this line. We're down into this deep oversold area. Okay, we're getting down into this region where we bottomed the last time. Pretty deep overdone. There definitely was some volume. Looks like some people definitely gave up on it a little bit. So those are sort of encouraging signs for the short term. But the fact that the momentum confirmed makes me feel like that the odds of going right through 430 or the 18-week line on the first try is probably going to be very difficult. So we've got some room. I mean, we're talking about a spider that's at 405 right now, and in 18 weeks it's at 430. I mean, that's a pretty big opening right now. Now this line's going to keep dropping. right? Next week it'll be lower. Maybe it's at 427 or 26 or so, I don't know. Next week, I mean, it's going to drop a little bit more. So that gap is going to close a little bit. We want to watch the quality of the rally, especially in stocks that have been beaten up. See what kind of volume shows up. See if we get really vertical price action in some of these that look like climatic action, like a bottom is being put in place. And if that's the case, that would be a more encouraging sign that might allow us to go sideways for a period rather than continuing to trend lower, fail at the 18 and then go to another new low. But we have to keep all of these things open as a possibility right now. Don't think you know what is going to happen. You don't need to make that decision right now. Evaluate bar by bar in each time frame. Use momentum based on MACD, ADX, volume. Use the moving average environment, right? And then our trend line analysis, because we can do the same thing on the daily chart. And again, I can clone this and I can show you that this one's interesting. But see how we got down in this channel, and when we came down to this one here, this bounced up, and then the second time it didn't reach the channel. Let's just zoom in on this so you understand. When you go up and you fail at the line and then you don't actually reach the lower channel, that's telling you that you're losing downside momentum. Okay, so we've got that. I can also see that based on MACD. You see how the MACD did not make a new low with price. So price made a new low, MACD did not. Now, the red DI actually did make a higher peak. That means the sellers were pretty decent on this drop. But look at how green DI did not. Now green DI is actually making a higher high. And this is very, very close. The red's very close to making a lower low. Now, if we get those two coming together like that, where we make a higher high, lower low, that really increases odds this is a legitimate rally. The fact that we got through this key line, this 18-day moving average, I think is very important for the short term after we came down and tested those two lower channel lines. So I think that bias short term is to the upside right now. How long does that last? Well, we got to look at the quality of the rally. If the quality of the rally is really good, we could get a lot better rally than people think. So don't go into it with this idea in your head that says, I'm definitely shorting when this gets to 430. I don't have that in my head. I'm thinking, if I'm forecasting, I'm saying, okay, if once this starts to rally a little bit more and gets up towards that line, I'm going to look and see what it looks like. If it doesn't look good, yeah, then I'm going to start looking for shorting opportunities. The only other thing I want to mention here is the hourly chart, and I want to spend a couple of minutes on this. In fact, let's just talk about something. I'm going to clear these lines off because I want to talk about something. I mentioned in the, for any of you that don't know, I do a show for Stock Charts TV that's, it's on YouTube, and you can find it. It's called Stock Talk with Rabil. And it's a 26-minute show. I go through a lot of individual stocks on there, but I also have a lesson at the beginning. And this week's lesson was on MACD, the 2-time frame pinch. But one of the things I wanted to mention is the 2-time frame pinch can be higher time frame being a divergence. So that's setting the stage for a rally if I get a pinch on the lower time frame. So if I look at that, I've got the divergence in place, and now I go to the smaller time frame and I can look for the pinch play. Now, I want to show you this. So we rally up, we come down, we overrun, because this actually was a pinch right here. Do you see how this overran the 18? When I have divergence on the higher time frame, I don't like this kind of pinch. Even though this was a good signal, I know this was a profitable signal, I don't like it as much. It's a very aggressive play when you have divergence because you're playing a counter trend play. So I typically prefer this entry here. Now, the problem with that entry right there was this was right when the Fed minutes were coming out. So again, I'm not going to sit there and just stick my head in the lion's mouth. I don't like trading when I know there's going to be a whole bunch of noise and all that. So unfortunately for me, I mean, the way I would look at it is if you read my book and you say, wow, these were both two really good signals. In real life, Yeah, I don't know that I would really recommend taking either one in my opinion, although they do meet the absolute rules that I've posted there. I actually think now that we have our break of the trend line, our test of the low. So this is two. One is breaking the trend line. Two is testing. That's a nice test. And now we've actually got the three in place. And notice what's happened this time. Look at what green is doing. Look at what the ADX is doing based on green. Okay, we've got the first, you can go back a while. The first time this has kind of really happened. Now, this pullback is going to mean a lot. If we can get a little dip, and especially if we can actually get a legitimate pinch play that comes a little closer to this moving average line, that could be pretty intriguing because this is the first time we can go back quite a while. We really haven't had green DI doing anything for this whole declining phase. So we have to have respect for this if you're a short-term trader. Now, you're still playing counter trend. So you have to go to your toolbox and say, I'm playing a counter trend trade. I'm not playing a trend trade. I'm playing a counter trend trade if I'm doing this trade, right? Now you could go find a stock that's trending to the upside, but I actually think the stocks that'll play the best are the ones that kind of look like this, that have been oversold, because you want the stocks where there's going to be short covering and you're going to get some participation that way. So, I'm giving you a lot of information with respect to this, and it might only last a week or two. Okay, I don't know, but right now I'm kind of inclined to believe that this is a short-term rally, counter trend, and we're going to have problems as we get up to the 430 area. Okay, so that's the update for the week. Go ahead and post any questions or comments. See you next time.